Welcome back to the channel. I know I haven't posted up any videos recently, but I've just been crazy busy and working on different projects and stuff. So let's just do a quick recap of kind of like what's going on and seeing potential areas that may benefit from some investment, or that you could benefit from some investment. So I just want to clarify again how markets generally work. You have an expansion phase, a peak phase, contraction phase, and then the bottom pretty much. And it just goes up and down, up and down, and up and down. And the reason I'm bringing this up is because much of our economy right now is being, um, well, we got shoved down here short term, but it looks like we've been reaching the peak areas as far as our DXY, which is the US currency. So if you want to look for potential opportunities in investing, having dollars right now may not be the best thing. One of the reasons why is, well, inflation. Inflation has ran rampant over the last few years from COVID. They printed more money and they increased the debt, and it's just been growing. So you can see here how same thing with markets, just comes up and down, ups and down, up and down. So anytime that it's above zero, that means there's some sort of inflation going on. Whether it's 0.5% or 1%, there's still inflation that's going on, which means money is being added to the system, which devalues the purchasing power of your dollar, and in turn generally items cost more. So let's look at this in a longer time frame. Let's look at 25 years. So you can see here, the only time in the last 25 years when we had a negative, which means like pretty much money was taken out of the system, and there was less. So when there's less of something, generally it's valued at more, has more value. But since we've had COVID pandemic, and then we've had more money injected into markets, printed and helped out for stimulus and stuff like that, the inflation has pretty much hit 8%. So if we take that even further, you can see all these price fluctuations. So just over time, you can see that we have had some drawdowns in inflation, some negative, which means our dollars were worth more at one time. But generally, that's not the case. You can see the numbers here: inflation 9%, 9%, 3%, 2%. And just over the long term, if we kind of track this, you can see like, okay, more inflation, less inflation. And then we get past the zero mark and it's more inflation, dip, less, more, less, more, less, more. And now seems like we're at an uptrend again. So personally, I would not be investing in, or I would not be holding dollars. I would be investing in other types of assets. We have this trend here going down since like 2000, pretty much the year 2000, and we've just been going down. We did have this spike up, but fiat money cannot be sustained as a hedge against itself. Fiat money is an inflationary type of system. It works for an inflationary type of system that's controlled by the government and the Federal Reserve. And whether they add more money at a slower rate, it's still adding to the system, which you can kind of see the trend here. So this area we've touched. When was the last time we touched this? Well, we touched it over here back in 2020. We've touched it over here 2016. And then from there, it's been like 2002. But it hasn't really broken above this area, other than this one time, this huge spike. But like I said, money just adding to the system, which is gonna devalue your purchasing power, the value of your money. So personally, I prefer to move my money into other things. The other reason why I don't believe that we're gonna be breaking past this point is because the debt, it keeps rising. They just raised the debt ceiling a few weeks ago. And then what happened? Well, they added a $1.5 trillion spending plan on top of whatever we already added for COVID. I think we're like at 5 trillion. Is it 4 or 5 trillion that we added to our system? And that is something to take a note of, because those things can help inflation out, which does not benefit you. So this is from Game of Trades. Great group, great Great place to get information from. They have a Twitter, you can check them out. But even the mortgage, right now I just want to talk about different types of markets. So let's talk about the housing market. So for the fixed 30-year average mortgage, we've had this downtrend kind of going on, and it's always hit this point. Boom, boom, boom. 2008 around here, boom, came back up and back down. I believe the bottom of the best time to buy for the housing was around 2012 when prices were like at all-time lows. But we've already broken this area and we've reached pretty much the next area up. And then what happened there? We got a rejection, and then price came down, and now we're at this area. Do you think it's going to go up or down? I personally do not know, but I believe that we would have a stronger chance of it coming down than going further up. And one is because, well, we have interest rates that were pushed down low because of COVID, and they're just trying to help out the economy. But at the same time, people were buying all these properties, pushing the house pricing up. So we might have something of a weird transition where price may not go all the way down. I mean, just go to like the next support area. But overall, I personally am not buying at these price points. I do not want to buy. I do not want to buy using a normal loan though. So just take into consideration the way you want to purchase your asset or your home or whatever you're trying to buy, because each person is different. So try and tailor your financial education, your financial literacy to something that would benefit you. So what do we have here? We have the NASDAQ. So the reason why I bring the NASDAQ up is because we've had this nasty drop, and then people are freaking out. I've known people to freak out. And then I highlighted this area on the RSI, which generally shows bottom areas. So every time it's gone into this white area, this white box that I made, it's generally led to a bounce up. So you can see here at these top areas, and kind of top out, come back down. Trade here, boom, goes into this white area, and this is an accumulation area. So people accumulate, they get to the top over here again, sell, accumulate, sell, and what is that? It's pretty much the same thing. Like every market, up and down, up and down, up and down, up and down, up. And what do you think is going to happen next? I would think it's going to go down. Personally, at least that's where I have my money at right now. So what do you think is going to happen? What I think is going to happen is, to me, it looks like a good buying opportunity, because you can see here, this was a buying opportunity as this crossed up, boom, moved up. There's another buying opportunity as this crossed up, next move up. This crossed up, next move up. And we are back down here again. And what happened here? It touched the white line. Or the white box. So you can see when it gets close to these levels, generally it's a good area to buy. Now that is not to say we can't go lower, but I do not think that is going to happen personally. Manage your own risk how you believe would benefit you the best and your family. That's why it's always good to do research and tailor it to your specific needs and what you're looking for. Same thing right here. This is the S&P 500. So we have a good buying opportunity. We have a run up, and then we have the top. So you have the cross down, boom, comes back down. And what do we have here? Oh, it crossed up and goes up, cross down, comes down, cross up, goes up. Well, you kind of get what I'm trying to say, right? So we now have a cross up, which I think is going to lead us to another push up. I still think we are going to have a recession, probably within the next 12 months, maybe 18 months, but we're just have too much debt, not enough growth, and it's just pretty much chaotic. Now, what are some investments that I may be looking at? I honestly would prefer to buy stocks. I'm always a big tech fan personally, but if you guys have any requests, we can do those on the side. Commodities are the things that I want to look at right now, because generally when there's inflation, you want to hedge it with commodities. But here's the interesting thing about this inflation. So, and this, we can add this to the reason why I do not want to hold dollars, because personally, if I see inflation rise up or stay about the same, the 7.9% increase in inflation year over year is not gonna mean diddly squat. Or I guess the dollar is not gonna mean diddly squat with inflation at 7.9%. Why do I say that? Because if the dollar even rises 5%, and that's gonna be its top area for me, that's still not enough to cover the inflation. So you are still going to be losing value in your money. If you have your money in a bank, that's probably one of the worst things for me to do. So why would I want to earn 0.05% if my money is losing value at 7% year over year? That doesn't make any sense. So some of the things that people have been looking at, freaking out about, is oil. So why I want to talk about oil is same type of situation with these stocks when you generally buy at these lower levels due to past metrics, you know. Same. Oil has this box up here that generally means the top areas. Now it doesn't always play out the same, but generally those are good indicators to look at if you're thinking that it's going to come back down, which I personally think it is, because we're pretty extended. So even if it goes up further, I don't see it having too much more room to run up. And for those of you that have noticed, we did have a price drop, came back down and came back up. So we can still have another slightly move up. It hasn't crossed down. That's why the red bar is a little bit extended out. And generally when it crosses, when you get the next down move. So that's something to be looking out for if you do have oil. I personally would have been selling little by little up to this point, but you know, do what works for you. Then we have gold. Gold is a good inflation hedge, right? Yeah, generally. I mean, if you've looked at over time, it's not bad, but it is a lot right now. And what I mean is, it's the amount of money in gold to move it. It's very difficult to make, let's say, 3,000% gains. So the total gold market cap is about $10 trillion. There's other companies or there's other assets that have a smaller market cap or a smaller total concentration of money that can move up and down with less money or have better opportunities. I think tech and other assets that are way oversold can actually do better than gold. But that's just me. So, you know, do what works for you. And over here, gold still does look like it has some room to run. But we may get this cross also down soon. So I'm not sure if this is going to hold, but I think we're going to have a test of support. If it doesn't hold, then it's coming back down. Like I said, gold, it has a lot of old money. And I'm personally not a fan of gold, so I'm trying to stay away from that. Then we have Bitcoin. Bitcoin is a little bit lower. As you can tell, the RSI is a little bit higher in gold, which means it has even more room to run, in my opinion. And the stocks looks like it's about to cross up as well. So we'll see how that plays out over the next couple of weeks. There are areas where I expect there will be selling pressure, but overall, it's a smaller asset. It's, I think, only maybe a tenth of gold, of what the money supply is in gold. And I like its flexibility. But that's just my personal preference. But if you have any questions, you know, go ahead, leave a comment, subscribe, whatever works for you. But the dollar to me is not looking that great, especially with like so many things going on. And then you have Saudi Arabia that's saying they might get away from the dollar. Russia is away from the dollar. And then I think China might even want to be away from the dollar, which they don't like each other. So no surprise there. But if I'm going to wait around for a 5% gain and then, you know, my money just loses value over time, I'd rather be positioned into assets that have a probability of growing over time. If you want to get, you know, a house and it's for you at this time, then that's fine. You know, just be wary of inflation. Just be wary of some technical data that we've had in the past that it may not play exactly out the same, but they generally tend to rhyme. So it's always a good practice just to kind of see past market moves, so you don't fall into similar traps, or you can avoid things or put yourself in a more favorable position. But for now, that's all I got for you. If you have any questions, go ahead, leave a comment, like, subscribe, and if you want me to review anything in particular, go ahead and let me know, and I'll try and keep you guys up to date. I might do a Discord just because people have been wanting to learn to trade and wanting to be able to learn to read charts, and hopefully that'll help position themselves better and help out their families and community more. So, until next time, I'll talk to you guys then. Later.